Hi there, it's Les Solgrove, Simply Des Moines Market Values for the 48th week of the year. This is December 1st. It means that this week's show, we're going to talk about November end of month statistics and also look at some trends that maybe are occurring here. Trend seems to be the key word I've been using the last couple of weeks. Anyway, let's get started. All right, here we are. We are week 48. I can't believe we're this close to the end of 2024. It just means that another year's coming, and I am busy this week working on updating some graphics for 2025 because a lot of my graphics are static graphics that only work for the current year. So that means I'm putting in some extra time, kind of putting some polish on some of the graphics. And I hope you'll stick around to the end of the show. I've got a couple of questions I'd like to have you help me answer by sending me an email at the end of the show. But please stick around through this week's show. So there are 49 graphics in this week's report at DesMoinesMarketValues.com. You'll be able to go to the show graphics and you'll see 49 different graphics in there. That includes what we're going to talk about today, plus all of the November graphics. So let's jump right in here and talk first of all about the topic that we've been following here the last several weeks here is closed sales. And sure enough, we were ahead last week of the year before, so we were year over year ahead of closed sales. And I kind of set the stage. I said, don't worry, we're still going to be behind because we have Thanksgiving that came this past week, and that means that basically we had fewer closings, but also there's fewer homes in the closing sale pipeline that's going to keep us from hitting probably that 13,200 magic number that we've been kind of talking about here. So you can see right over here at the far right that we are down this week again by 32 sales. However, what I thought I'd do is take you through all the subcategories and show you where we're ahead and where the laggers are here behind. So as we go into new construction single family homes, we have not been behind at all this year in this particular category. In fact, we're almost 70 homes sales ahead of last year's pace. And that's even with a slow week here with Thanksgiving this week. So, we will probably see a little bit of a jump the first week of December. So, week 49, we'll see a little bit of a jump just because it's been a holiday week and a lot of the closed sales are not being recorded until Monday and Tuesday of next week when everybody gets back to work. So, with Thanksgiving being so late in the month this year, I do expect that the December close sale numbers are going to jump just a little bit, but I still don't think we're going to have enough to close. So almost 2,000 sales in new construction. That's a pretty good clip, and I think that that's going to be kind of the standard here. I think so. Next year we'll watch that and see if how much above 2,000 we hit. I think we'll continue to see new construction be pretty strong. As far as existing home sales, these are the resale properties, and it's not including condos or townhomes. It's just the single family properties. We're at 8,365 homes closed year to date. That's also a surplus over the previous year. We're still in that surplus mode at 52 homes over last year. I say we're having a temporary comeback because I think that we're going to see this number drop and we'll go back into the negative. But remember this number 52 ahead of last year here as we move into existing condo townhomes. So these are the resale properties, pre-owned condo townhomes. We're 51 behind last year. So the net of the existing stock is by one. We're ahead by one. That's why I say we're going to see a little bit of a drop. In fact, this past week, you can see right here, we had a huge drop in the number of condo townhome sales. I call this category the little darlings because the last couple of years with COVID, condo townhomes were very, very popular, and those were the home sale category that, boy, if you had a condo townhome on the market the last couple of years, not including 2024, but 23 and 22, those were the years that that we saw basically that category sell pretty quickly there. So where's the deficit? The deficit's coming from new construction condo townhomes predominantly. You can see that really from about late April on, we've been behind in the sale pace of new construction condo townhomes that are on the marketplace. They're just not selling as fast. And I think, again, a lot of that has to do with the fact that after COVID, home buyers decided they wanted to get back into full-size single-family homes, whether it be new construction or existing stock. And so we're not seeing quite the number of sales that we saw during the COVID years in that. So that's kind of the 102, excuse me, 102 behind where we were last year. We're right on the verge of surpassing 500 closed sales per day per year. I had to take a drink and show off my little mug here with my logo on it. Thanks to my daughter Kelsey for that. Let's go into where some of these numbers look when we're looking at active and pending sales. So this is the number of homes brought on the market in a 30-day period or the monthly period here. How many homes were added to the property? It says newly listed. That doesn't mean new construction. That means how many homes actually came into the market in the green, and how many homes actually went pending. That's in the yellow. And you see the little life preserver there. The market was kind of thrown a life preserver in September when mortgage interest rates dropped down close to that 6% mark, which of course meant that the local rates were below 6%. But you can see what happened after that. In fact, right here, 1,160 homes added in a monthly period in October. And it's hard to believe. I went back and looked through the rest of the year previous. That's the highest number of homes we added to the market in a single month, um, newly added. We typically see just over 1,000 when we're in the heat of the market, and that 1,106 in September and 1,160 in October. Those were the 2 months where we saw a pretty good surge of new listings, and I think that homeowners were feeling like maybe that's the time to get into the market. We've seen homeowners kind of stay on the sidelines this last year, and that's why that number is now more believable if you think about it. We were short of inventory all summer and all spring and summer long. And as we got that drop of interest rates, I think there was some optimism that maybe they would stay down there, and some homeowners decided to jump into the market, and that's where we saw these last 2 months, September and October, actually jump. Now, you're looking at November, we actually are down again, and same thing with sale pendings. But again, that's pretty typical for that time of year, for this time of year. Um, but that's a good sign. So I think that when we start talking about mortgage interest rates moving into the next year, they're really going to have more of an effect than we really think they have. So how did this look with the closed sales by month? There's that life preserver. In fact, we need to move it over because closed sales tail behind about 45 to 60 days. So really the life preserver comes in around October, November, and that's why we're still seeing some fairly strong closings numbers here in October and November. Had Thanksgiving not been the last week of the month, I think we might have shown a little bit higher closed sale counts as we moved in. Again, that's why I think we'll see a strong start to December's closed sales, but they're not going to be able to maintain that just because we don't have enough in the closed sale package. But at 1,056 in October and 943 in November, that's respectable to early spring market numbers. We're 952 in March, and that's pretty close to the same pace that we were closing in November, which of course the March numbers would have been from January, February, which it's, again, that 45 to 60-day trailing. As far as pricing goes, the median sale price and days on market, this is a combo graph here. This one kind of gives you an idea that we're seeing in November due to that September and early October bump. We're starting to see a bump in sale prices. This tells me that home buyers out there, while they're sensitive to mortgage interest rates, they're really wanting to buy the little higher priced properties because A, that's what's listed out there, but also they're willing to spend a little bit more when they feel like that 30-year fixed rate is going to be a little bit lower, and that's what we're seeing. That 293 is very comparable to September, August, and July numbers here in the 290s. Of course, in the middle of the summertime, we see our closed sale prices jump just because that's from all the early home buyer frenzy when we have multiple offers, and also new construction sales are predominantly in that first half or first 2/3 of the year. So, um, the reminder here, and this is the weekly mortgage rate chart here. The red is the weekly columns are the weekly mortgage interest rates. And the thing I want to really point out is here that things could be much, much worse because if you look back a year ago around week 30 or week 28, that's when we started to see mortgage interest rates rise fairly dramatically. And they almost hit that 8% number as we started into October there, October and early November. Early November is when they actually started to drop, and that's where we saw a lot of increased sales. This year, we're still kind of at that high rate, although we're not at almost 8%, we're close to 7%, almost a full percent lower than a year ago, at least at the high, back up here in week 43. But I think that's what's really holding a lot of people right now from jumping in and jumping into the market. We're kind of waiting for the election that's happened. We're going to see what happens next year for that. But I think right now there's a lot of people that are just kind of sitting back now, going, "Okay, let's just wait until the spring market." If you're a home buyer out there, I'm going to caution you. I'm going to say if you find the house that that meets your needs, or keep don't stop looking, keep looking, because you're not going to be in competition with fewer people, fewer other buyers than you will be from this point until about that first week or two in January. So you're going to have a little bit better timing to go look for homes. You'll also have less chance of being in multiple offer situations, because once we get into January and February, all bets are off as we come into the spring market. So remember this little column chart here, the little lines here. In fact, let's just go to the next line. You can see the black line represents where the interest rates are this year. So this, now that what used to be red is now this black linear line here, shows you the weekly mortgage rates. And what I like to do is, I've shown this a couple of weeks ago. I'm bringing it back. We're going to look at how do mortgage rates affect listings taken, pending listings going under contract, and closed sales. And it's just really telling quite the story. The correlation between the two, I didn't realize this until a couple of weeks ago when I did this. But you can see that as mortgage interest rates kind of peaked here, and they dropped just a tick this last week. But we're still seeing fewer homes coming on the market. Again, keep in mind we have that outlier of Thanksgiving here on week 48. The weekly pending sales, again, as the interest rates go down, we see pending sales on the rise. As interest rates go up, we see pending sales go down. So there's your cause and effect of the marketplace there, and interest rates are really, really affecting the sale pendings. The one that really is kind of cool is looking at the closed sales, and because this is a trailing 45 to 60 day trail, it just happens, and I think it's just kind of cool that it kind of matches really what's going on in the mortgage interest rates. Mortgage interest rates go up, home buyers are reactive, and then we see these closed sales kind of follow along. Now, as rates go down, the number of closed sale pace kind of slowed down. But again, it looks like it's the matching thing, but it's just quite the opposite here. As they start to go up, we'll start to see some of these sales come back up because they're 45 to 60 days out. So as far as the number of homes with the months of inventory, this is going to be kind of fun this week. I added a new layer to this graphic. Months of inventory is basically, again, as you all know, this is the pace of sales, or pace of how fast the homes are selling. So, for example, in that under $100,000 price point, there's 3.7 months of inventory, which basically means, again, you hear me say this all the time, if no new listings were to come on the market, we would be out of homes for sale in 3.7 months. You get all the way over here to $800,000 to $900,000 price point, it's 19.7 months. Well, I tried to put some numbers on this and apply some dates to this, just to give you a little different visual of what our run out of homes date is. Now, again, this is based on the premise that no new listings come on the market at this point forward, and we know that that continues to happen. We still do get new listings all the time, but on a snapshot in time, look at the way this looks out here. 3.7 months of inventory says by March 24th. That's the date, 3.7 months from now. That's the date we run out of homes under 100,000. 7.6 months of inventory, that's July 21st of next year. All the way over here, this one I pointed out earlier, 19.7 months and 14.8 for the $700,000 to $800,000 price point. That pushes inventory in those categories. We'll run out of homes. It takes us all the way into 2026 to do that. Now, again, don't panic. Don't go off and say Les is saying that we have, that we're not going to have any home sales. We're not going to run out of inventory for this until July of 2026. These numbers fluctuate well, actually every day, but every month when I run this report, they fluctuate. So it depends a lot about where the number of homes that are currently on the market and the pace of the sales. Again, that's 19.7 months as of the end of November. So thought that was kind of a fun little exercise to just kind of put a different spin, a different visual on what months of inventory looks like. And I might bring this back once in a while. So it's kind of that reduced to the ridiculous theory of, in marketing. So, all right. Two more graphics, and then I got a couple questions for you. This is, and let me get my big fat head out of the way. This is the all homes for sale in the metro by price points. And I'm working on redesigning this graphic for next year, but basically this shows you in the different price points. So under $100,000 in the metropolitan area, we only have 1,600 homes currently for sale in the metro. Contrast that with that $300,000 to $400,000 price point, which is the crossover between existing and new homes. We have 868 homes for sale. And then as you go down the other way on this chart here, you can see which community has the most homes for sale. Ankeny, for example, has 423 homes for sale. They kind of lead the way. 356 is Waukee is our second place. And so if you're just working the Des Moines metro area and you've got home buyers out there, this is a great chart to kind of show them, where the bulk of inventory is. And maybe it'll, spur somebody to look in maybe a different part of the metro where there might be some more homes in their price points. Also, if they are struggling in that 100 to 200, but they can, maybe buy for 210 or 220, you can see that there's quite a difference between inventory from 1 to 200,000 to 2 to 300. It's almost three, not quite three times as much inventory there, but at least you've got quite a bit more inventory. So as far as how this same graphic looks on the sale pending side of things, again, 18 homes are currently under contract under $100,000. 314 is that $300,000 to $400,000 price point. Again, that's kind of the bulk of and the meat of our marketplace. With 1,172 homes currently under contract in this lower right-hand corner, that's a pretty typical number. I would say it's a little low, but that's not to be, in the metro, that's a fairly normal number, I would say, for our marketplace. So, all right. Well, thank you guys for sticking around because I do have three more questions for you and maybe more. What I'd like to know is I'd like you to send me an email and let me know what information you see each in any of the shows I've produced. What information do you find most helpful? Whether it's months of inventory, if it's inventory count, if it's interest rates, let me know because I'm in the process of updating a lot of those graphics and charts for 2025. Also, which graphics help you tell the best story? And maybe I'll throw a little caveat on there and say, which graphics are confusing you? Because my goal is to help you understand with a visual. And if I'm producing something that is confusing, let me know that as well. So the other question I have is, what is the most important data to you? So, I mean, it's kind of repeat of that first question, what do you find most helpful? But I really want to know, rank what you find most helpful as to what's most important to you, because I'll focus on that. Doing this show every single week, sometimes I have a little trouble coming up with a new topic. And when I have some feedback like this, I would love to be able to go down that path and maybe change gears and talk to you all. So you can email that as well as any other of your comments and suggestions to statguy@DesMoinesMarketValues.com. I apologize. It's got a AI chat bot on there. Just ignore that dumb thing. I can't figure out how to turn it off. I will turn it off as soon as I can, but that's kind of the show this week. So Thanks again for joining me. If you enjoy the content and you find it valuable, please hit that share button, hit the subscribe button, hit the like button, hit a button, find a button somewhere on your site and click it. Hit that notification bell. Your support does help the channel grow. We continue to grow each week, and I do appreciate that. And with that, I will say welcome to December, and we'll see you all again next week.